Jonathan Barratt now joining us to talk more about where crude oil might be headed. $100, can it fall below 100 as per your estimate? You're seeing a lot of action that is taking place, whether it is the meeting in Saudi Arabia, the US president summoning 7 oil companies looking to cut down federal tax. And then you've got the ugly R word, recession, which has crude prices affected as the world thinks demand is going to fall.
That's 100% correct. I mean, when you look at it, still we've got the macro events out there playing away for the market. But I really think that the market at the moment is focused on the R word. Interest rates, inflation, all that suggests that that there is that heightened potential for a recession, and with that comes less demand for oil. So, but we've also got to take in stock that oil has had a huge run. And this correction that we're seeing is something that would have had to have happened. But I do think we have reached highs. I do think it can't go further than these levels. And I think if a recession comes, it'll bring the market back into balance for the price of the commodity.
Jonathan, there are reports that how European as well as American hedge funds have been selling off their crude positions, right? So if that continues with what you're seeing in that aspect, along with the ugly R recession word, distinct possibility that below $100 could very well be the new normal for the rest of the year.
Absolutely, 100%. I mean, I think when you look at it, obviously the heightened concerns we have, I think a lot of people started to think how Russia would play out, how this would play out with Russia, how the situation in the Ukraine would play into the energy markets. We have seen that in light of what's happened to the gas markets, and obviously we've seen a 300% increase in the price there. But when you look at oil, it's slightly different. We are seeing the oil needs that are being met, particularly by the EU. We're also seeing issues in demand, as we know, in Asia. So when I look at it overall, the balance is towards softer prices. When I look at where crude oil is actually trading, I think it can go below sub 100, even down to US $95 a barrel. The caveat on that obviously has to be the Ukraine. It also has to be hurricanes in the States, because we're coming up to that season. But generally speaking, I think we're looking for a more softer approach. Remember, the CRB is still up 45% this year on all commodities. So I think a nice recent correction will only be healthy for things.
Jonathan, what did you make of US Fed Chair Jay Powell's comments overnight in the testimony towards the Congress, where he has said soft landing may be quite hard. Now, all of that is, of course, going to have a ripple effect. We've seen that in the crude markets, and we saw what happened in the bond markets in the rally.
Yeah. Look, I think once again, it's all about letting the market know what they actually feel, how they think what will happen. Obviously, a softer landing is what we're looking at. If you look at 2023 prospects, people are saying that inflation will be under control, everything will be all right. I think people are a little bit too short-sighted on this. I do think that this could extend itself a little bit further than what people think. And as a result of that, I think that softer approach will see commodities come under a little bit of pressure. Remember, some commodities are already under pressure, but others are certainly still well bid.
We're seeing that with the base metals, aren't we, especially when it comes to copper, nickel, aluminium. What about gold? Gold is always seen as a safe haven, but gold prices are also going down, which I guess would be expected with what's happening with the US dollar.
Yeah, look, a little bit disappointed with gold, I must admit. It is trading within a narrow range, and every time it gets down to about 1820, that's good support, and we're very close to that level at the moment. Gold and silver, they've just languished over the last month or so. Obviously, haven't gone down too much. But the US dollar has remained better bid. I do think that nexus between the currency and the metal is certainly there. But I do expect to see, if we get more inflationary reads, a little bit uncertainty there in terms of whether we're going through a soft landing or a harder landing, then I think people will come back to the metal. So I'm not dismissing where the gold will go. I actually like it down these levels and would look forward to trade back through that 1870, 75 level.